Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 25th, 2021. I want to quickly recap stock market activity in last 2 weeks, trading ideas for next week, major news shaping the market, best and worst performing stocks, and few good stocks to buy right now. With that, let's get started. From a major stock news perspective, we have two earnings winners. We got Snap here, did great after the earnings, and American Express also did nicely. And we got three red hot stocks here: BNTX, Novavax, and OMI. They are still dirt cheap according to this news item here. And we got a lot of cybersecurity stocks doing great. Got Palo Alto, Cloudflare, FT&T, and so on and so forth. And we got one recent healthcare IPO, ticker symbol DOCX, Doximity. I think this is a great stock. You should probably put it on your radar. It's okay to buy a little bit and hold it. It's a great stock. And we got all the Chinese stocks. They're all down big time. Looks like Chinese government is really cranking up on these tech stocks. Especially Chinese online education stocks are down very big. There is a rumor or a news item that we might see these Chinese online education stocks to be classified as non-profit. So that might have some issue on this Chinese online education stocks. And SoftBank Vision Fund bet on DD fall into red. So this is where a big company like SoftBank, they are betting DD will go down. And Cathy Wood sells China tech stocks, warning there is a valuation reset in Chinese stocks. I think we should watch these Chinese stocks. There are some good ones. We can look at those, and look for some sign of stability, and then slowly start buying. According to this item here, we got five best Chinese stocks: Weibo, Sohu, Neo, um, Boyd, and Lee. So I think some of these are good ones. I specifically like stocks like Neo and Lee, and even Weibo on a lower levels. And also I like FUTU Holdings, FUTU. It did great, but now it's dropping off late. So we should also look at this company. As it dropped a little bit, it's good to buy. And we got Las Vegas Sands stock is falling amid of the concern that COVID, might have some impact on Las Vegas Sands. And we got Boston Beer here, ticker symbol SAM. It suffered a huge sell-off last week after the earnings miss. Looks like their hard seltzer is facing some stiff competition. And then we got glucose here, GKOS. It's a disappointing CMS rate. Looks like healthcare, looks like Medicare, Medicaid, some of these areas, they will give a lower rate for glucose reimbursement. So that's why the stock is dropping. I think it may be a good to buy at this point. So let's look at these and many more. Let's dive in. From a major indices perspective, as you can see here, S&P 500 is in the positive territory. They are into all-time high, record high. Dow Jones Industrial Average also into all-time high, as you can see here. Nasdaq clearly all-time high. So as you see here, we got a huge drop last week. Then stock came up, nicely. Same here, we got drop, up, drop, up. So I think this is going to continue for a while. Be patient, have some money ready. So when the stock indices drop big time, put some money to work. And then we got Russell 2000 here. Russell is a weaker of the indices right now. All the big cap names are doing great, but the small caps are struggling. That could be a sign of what will come in the future. Typically, Russell 2000 is looked upon as a leading indicator. As Russell falls, you could really pay close attention. Some of these bigger indices also will follow suit. So we got to watch out a little carefully here. ZB, the bonds, they are gaining a little bit strength, as you can see here. Interest rates are lower. This is going to hurt bank stocks. We got to watch out some of these bank stocks here. I personally like some of the bank names at these levels. And then we got crude oil. Crude oil is bouncing off nicely, as you can see here. And we got gold here. Gold is kind of trading range right now, and dollar is kind of stabilizing, as you can see here. So with that, let's jump into S&P 500 here. As you can see here, S&P 500 is all-time high, as you can see here. And skew is one thing I always watch carefully. Whenever skew is over 145, you got to watch out. So typically when the skew is high, you can anticipate market to drop. So right now skew is at 159, squarely above 145. So I would expect turbulence in the market in the upcoming weeks. So watch out and have some money to put to work. And then VIX itself is kind of slowly, in the trading range, slowly deteriorating. I think it's good to see, skew, it can go down like this for a long time. So there will be some market turbulence that will cause skew to go up. I mean, VIX to go up. So I will watch VIX carefully here. I would trade carefully. Don't chase the stocks at this time. Buy good value and take it from there. And from a major stock perspective, clearly all the big cap names are doing great. So as you can see here, Microsoft, Apple, Amazon is a little bit struggling, but it's recovering off late. Facebook is clearly doing great. I think they won some lawsuit, and they're doing great right now. Google is off the charts, doing great. And then we got Netflix. After the earnings, stock struggled a little bit. I would buy a little bit of Netflix at this point. I think it's okay to buy right now. And then we got Nvidia. After the stock split, it's trying to see where to go. I would buy some Nvidia at these levels and hold on to it for a while. J&J clearly doing very nicely. It had a couple of bumpy ride in the past. Now it's doing nicely. I would wait for a little pullback and buy J&J. Always a good one to buy. PayPal is doing great. Looks like, because all the bank stocks are down, the credit card companies and fintech companies are doing great. So PayPal is great right now. United Health is kind of trying to see where to go in a trading range right now. I would buy this company on any weakness and hold it for a while. Merck, I think it's trying to make its way up here. I will buy Merck on any in down days and hold it for a while. We got Medtronics. Medtronics is back. All the elective surgeries are happening right now. You got to watch out as you go forward with the Delta virus here. You got to watch out whether there will be a resurgence in this virus here. That might put a dent on this Medtronic stock. We got JP Morgan and Berkshire Hathaway. Clearly, banks are not doing great with the interest rate not doing great. So I will watch for these JP Morgan, Berkshire Hathaway, and other bank stocks. I will be a buyer in JP Morgan at these levels. I'm sure interest rates have to go up at some point. It will boost JP Morgan and Berkshire Hathaway. Then we got fintech like Visa. Visa doing great. I think it's also buying some other companies. I would wait for a small pullback in Visa before I put my money to work. We got Home Depot here. I think gardening season is on. People are buying Home Depot supplies. Buildings are building construction is ongoing. So this company will do well. I will wait for a little pullback before I buy Home Depot. Next, let's look at a few more companies to see what's going on here. Oracle, I think we have a huge drop here. I would buy some Oracle at these levels and hold it for a while. Oracle has done nicely, as you can see here. Now it's a little bit drop. I think at somewhere around 85 or so, you'll have a nice support level here. SAP, I think stock is a big yo-yo at this time, goes up and down, up and down. At these levels, I would buy SAP here and hold it for a while. It's a great German company. A lot of the big corporations have SAP software, as you might be knowing. Shopify is clearly off the charts here. I would not wait. I would not buy at these levels. I would wait for a small pullback here. Snap, it has done great after the earnings. Stock has jumped up. I could see Snap going to 100 pretty soon. I'm a believer in Snap, but I would buy on a downturn, on a pullback, not at this time. And we got Twitter here. Clearly social media is doing great, so I would buy Twitter on any little pullback, and then I would go with that. Then we got video gaming sector here with the Take-Two, one of the better players here. I would buy Take-Two on any downturn here with the COVID variant Delta taking market by storm. Stocks like video gaming stocks like Take-Two, Electronic Arts, Activision Blizzard, they all can do nicely. And then you got AMD here. AMD is getting its groove back, so it's on its way to $100 again. I would buy AMD on any small pullback and hold it for a while. And we got Moderna here. Moderna is doing great. It's almost at all-time high. Looks like they're coming up with some cancer drugs. I think this company will do nicely. I would buy this on any pullback and hold it for a long time. And we got American Express here. American Express has done nicely after the quarterly earnings. I would buy this company on a little pullback. We got CVS here, which is again, great company. Right now it's trying to go up. I would buy slowly and hold it for a while. And we got Amgen here. Amgen is trying to get its groove back here. I would buy Amgen on any pullback and hold it for a while. And we got Edward Life Sciences again into surgery and elective surgery. Again, elective surgery is back. I would buy this company on any pullback. And we got Bank of America, Citigroup, both are into financial area. I would buy these stocks at these levels. With the interest rates low, it's impacting bank stocks. I would buy this on a pullback. Interest rates will eventually go up. And then we got fintech here, MasterCard. Again, I would not touch at these levels. It's too pricey at this level. I would wait for a little pullback. As you can see from the chart here, it always pulls back nicely. That would be our chance to buy. And then we got Lowe's here. Lowe's is also trying to go up along with Home Depot. I would buy this company on a little pullback and hold it for a while. Next, we'll go into small cap weekly winners. So as you can see here, we got a lot of these small cap stocks, and this is organized by 2-week performance. In last 2 weeks, these stocks have done nicely. As you can see here, the top here, PLXP, has done 55% in last 2 weeks. And from there, it's in a descending order, as you can see here. I would not like to chase any stocks, but if you like to buy these, I would recommend you to look at the stocks with the positive quarter over quarter earnings growth. For example, KRUS has a positive quarter over quarter sales growth, and you can look through here HBMD and NTP and so on and so forth. Look for positive quarter over quarter growth and look for a nice gross margin, positive gross margin. For example, here we got GPX, ENDP, and so on and so forth. And also look for stocks which have done pretty okay. At least you should see some greens here. If you see all red, I would not buy those. I think we got a lot of greens here, which is okay. And then look for stocks which are not at 52-week high, at least maybe 10% or so down. Buy those because they typically are in a pullback. They might go up. And also, as you can scan through here, look for stocks which are a little bit weaker in the shorter term time frame. In here, all these stocks have done great. I would not buy here. I would wait for a little pullback here. So with that, let's go to small cap weekly losers. Typically, I look at this list pretty carefully. Typically, losers will turn into winners pretty quickly. So here we got all these Chinese online stocks like GoTo. I would wait for a little bit a sign to improve in the price. As you can see here, stock has been falling off late, 96% in 1 year, all the way to 1 month, even 1 day. Last Friday, all the Chinese online stocks, online education stocks fell off because Chinese government may be considering having all these online education stocks as non-profit. That will have an impact on these stocks. Then as you scan through here, same thought process here. Look for stocks with positive quarter over quarter earning. For example, stocks like Fibrogen, even Dow, and BTCM and so on and so forth. And also look for a positive gross margin. As you see here, there are a couple of these stocks have got good gross margin. Those are the ones that will do well. And also look for some signs of life in the company. For example, you got XYF. It's been doing great, but it's falling off late. That's something you can look at. Even MCR beats, it has some progress. It has made some progress in 1 year, but off late it's falling off. Look for some greens. If it's all red, be a little bit careful and watch out carefully. And try to look at price to sales ratio. Wherever you see red here, that tells you from a valuation perspective these stocks are a little expensive. Watch out, don't be in a rush and buy slowly. And also, as you scan through here, look for companies with the positive net margin. For example, here it's a Chinese company. There is a net profit here. You could look at these companies and buy a little bit at this time. So with that, in this chart here, I have highlighted one stock here, Fibrogen. You could buy the stock at these levels. I think it will bounce back pretty nicely. You might have to have a little bit patience here, but I'm sure this will bounce back. And I also like stocks like MOXY here, $17 stock. It's got a nice 5-year profit sales growth here. Stock has been falling in 1 month, 2 week, and 1 week. I would buy slowly at these levels and take it from there. So with that, let's go into mid-cap weekly winners. As you can see here, all these stocks have done great in last 2 weeks. Look at this performance, 195% in 2 weeks. That's a great performance. And I would use the same methodology here. Look for quarterly, quarter over quarter sales growth here. Look for the ones with a good sales growth. I think most of these companies have got nice quarter over quarter sales growth. Then look for gross margin. Look for at least double-digit gross margin. Many of these stocks have got double-digit gross margin. As you can see here, you got a lot of these companies like QDEL and InMode, one of my favorite, and so on and so forth. Typically, if you add the quarter over quarter sales growth and gross margin, if that's more than 40, that tells you it's a company stock will do well. We call it rule of 40. Typically gross margin plus quarter over quarter growth more than 40, you can buy the company because it's a pretty decent valuation. So with that, few companies I would look for. You got to be careful here. I like stock like InMode. It always did nicely. And watch out for RSI. Many of these companies got high RSI, so you got to wait for a little pullback here. I'm not a believer in buying when the stocks are high. You got to wait for a little pullback and then buy the stocks. Now we'll look at mid-cap weekly losers. In here, I have highlighted few stocks here. These stocks have lost a lot in last 2 weeks. For example, TAL here lost 72% in 2 weeks. So all the online education stocks in China have been battered. They lost so much in 1 week. It's very difficult to imagine. So with that, I would recommend buying stocks like Virgin. Virgin Galactic stock has dropped 40% in last 2 weeks. I think they did a secondary offering, and also Jeff Bezos, Blue Origin, they took to sky and they went to space. I think they did a little better than Virgin Galactic. I would buy this company. This company always finds a way to come back. Then I have glucose here, GKOS. Stock has fallen off drastically with reimbursements in the Medicaid area, probably lower rates. That's why stock has dropped. I would look for I would buy slowly and accumulate a position here. Then we got Boston Beer here. Company stock has dropped 28% in 2 weeks, 24% in 1 week after the earnings miss. Typically, their a hard seltzer has a stiff competition. I would buy some of these stocks at these levels slowly and accumulate. This company had done great in last 10-15 years or so. Then we got 3D Systems. I think stock has dropped 25% in 2 weeks, showing some sign of progress in near term in a 1 week time frame. I would buy some 3D System and hold for a while. And as you scan through here, I got Charge Point here. Charge Point also dropped drastically 19%. I would buy some Charge Point with the infrastructure bill probably in the works. This company can also take advantage of that. Typically look for stocks that have dropped so drastically in 2 weeks and showing some signs of progress in say 1 week or 1 day. For example, 3D Systems showing some signs of improvement here. I would pick up this slowly, and I would also look at SHLA's $27 stock here showing some signs of progress in 1 week and 1 day. As we scan through here, we got rig. I think there is some rig count going up. We got to be careful with this company. This used to be a high flyer. Now it's $3.58 stocks. If you want to trade in, trade out, this may be okay, but be careful. Watch out. Maybe because there is a emerging trend, electric vehicles. Eventually, all these fossil fuel stocks may not do well. And as you look at here, we got no before, K and BE. It may be okay to buy some. It's trying to bounce off in a 1 week time frame. I think it's okay to buy this stock also. So with that, let's jump in here into large cap winners. All these stocks have done great in last 2 weeks. Moderna has jumped up by 50%. Wow, that's a great performance. They've done nicely in 1 week. Same story here. I will not chase these large cap winners, but if you have to buy some, I would look at stocks like Doximity here, DOCS. It's a new IPO. They're like a LinkedIn for medical professionals. Medical professionals can exchange ideas. It also has offering around telehealth. I think this will do well. Recent IPO down 7%. I would buy some of this stock. And also I got here XM here, Qualtrics. Qualtrics is a great software for survey to understand your customers, your employees. I would buy some Qualtrics. It's down 34% from 52-week high. So these are two I would look at. You can also look at stocks like Novavax, which is down 39%. There will be some nice pullback, nice bounce back in this stock too. So with that, let's look at large cap weekly losers here. As you look through this list, you see a lot of Chinese names here. I would be a little careful. I will wait for a little sign of stabilization before I jump in. Clearly, last Friday was a train wreck. If you're a contrarian, you can put a little bit money to work, take small bets. It will pay off in the long run. I would also look at stocks like Affirm. Affirm is it's a fintech play. They help you buy, pay through installments. I think stock came down along with along with a couple other fintech stocks. Apple may be having some offerings here to compete with stocks like Affirm and other stocks in this area. I would buy a little bit of this company at these levels and hold it. And then you got Coinbase, the cryptocurrency trading platform. Stock is down 48% from 52-week high. I will buy slowly in these levels. And then I got FUTU here. I like this company, Hong Kong-based fintech play. I might buy this slowly. And also Chinese stocks, I'll be a little careful. But stocks like BILI and even PDD could be okay to buy slowly. And I like EOG when it comes to energy. I might buy this company slowly. It's a great stock. It's been company has been managed very nicely. Then we will go into last page here. Thank you very much. Happy investing and trading. Please subscribe.